Hey guys, it's Will. Hopefully you're having a great day today. We're going live here as the markets have been moving quite a bit today. We saw some pullbacks in the markets. How is everybody doing today? Oh, that's very zoomed in chart. Is that any better? Let's see if we can pull up a better chart here. How is everyone? Everyone doing good? Doing okay? We have some things that we're going over right now that are related to defense stocks. So we're going to be jumping in with the defense markets for sure. I know my screen is black. One moment. Let's see if we can get a better view here. And this is great for engagement. How are you guys doing? How are you guys doing? All right. Let's jump in and make this thing smaller and smaller. It's kind of cool. You guys see the behind the scenes. Look at that. The behind the scenes. Isn't that exciting? All right. Kind of lined it up. Good enough. And something's missing. There we go. All right. How's everybody doing today? Can you hear me okay? See me all right? Let's jump into it. So there's going to be some focuses today. It is Friday afternoon, so we had a pretty intense market day today. We saw some red portfolios down about 1.5% today. And we do see some sell-offs kick in a little bit here. How is everything? Let's see the live chat. Are we good to go? We are live. Let's see. I was going to pull it up. Maybe we can pull it up in an alternate. There we go. We are live. So how is everybody? Doing good? Friday afternoon? Wow. Cool. Where's everybody tuning in from? All right. Okay. So, where's everybody tuned in from? We got what's going on? APLD. Eddie wants to see that. Elvis says red wire. Okay. All right. We got some comments coming in. Luis, what's up, Luis? Eddie, what's going on? Joseph David says excellent, doing well. Awesome. Cali. Awesome, Eddie. What part of Cali? That's cool, man. All right. Cool. So Bone NC. Awesome. All right. Let's take a look at the markets. Let's see. SoCal. Good stuff. Awesome, guys. Yeah, there's a lot. I'm surprised, the other day we did that and I saw like, oh, Berlin. Okay, Berlin. The other day we were seeing like Singapore and like let's see, Ontario, California. Is that Ontario, Canada or Ontario, California? Curious. High Desert AV. Is that supposed to mean AV? AZ? Did you mean to say AZ? Awesome. All right. So let's get started here. So I'm curious before we do. They dipped today. Did you guys see that? I'm looking at my Robinhood right now and things dipped today for sure. Let's see, Whittier, California, Antelope Valley. Eddie says, okay. I have a friend that lives in Alberta, or I have family that lives in Alberta actually. I don't know if that's the same. Now, as we see the markets heat up today, we're going to jump into it. And let's kind of get a breakdown on some of the markets and really see what's going on here because wow, did see some pullbacks today. We did see some pullbacks for sure. All right. Redwire, Antelope Valley, cool. UK, see some people from the UK. That's always good to see. I'm always surprised. Like we do get the New Yorks, but one time we did this and it was like everybody from like it was like India and like I don't even know, Taiwan and see Buffalo, awesome. Wyoming, cool. All right, let's jump into it. So we're on the markets. What do you need to know as we jump in here? Well, oh, someone literally said Taiwan. Taiwan, that's hilarious. Long Island, New York. All right. So let's jump in. Are AI boom stocks out of juice? Or does the data center crash start today? We do see some pullbacks today. Let's jump into it. We see the markets move in some red here. Big Bear AI pulls back down to about $7.50 in the AI market. They are now below that previous resistance level. We've seen them start to correct back down. Not such a bad correction for the defense market, actually. I was expecting more of a defense correction today, but overall defense stocks, see defend was down 1.1%. But look at that red candle on Big Bear. They're back down to that $7 support level. Still bullish and up like 7x since this time last year. What are we looking for? Nearest support level at $7 a share that they bounced today. So we're going to watch that with Big Bear AI. They did bounce it today, and we were watching them as they sold down this morning. I think they were down this morning, down to that $7 price point. So they already rebounded. That was one of the trades we were considering. We ended up shorting some of the market today over on SOXS. Still wasn't enough to turn our portfolio positive. It was just a small hedge. When you're looking to grow your portfolio and get your portfolio on the right track, you're really going to be looking at the most cutting edge markets, but you don't want hype. You don't want what everybody's talking about. You don't really even want companies that maybe have really a lot of cash. Really what you're looking for are companies that are creating a lot of value in the marketplace and continuing to do so. Those are the companies that will withstand any pullbacks, any dips. And if you take two companies in a market like the market we're in right now, you take two companies and you hold them next to each other. And one company, let's say, one company is $10 million market cap, and the other company is a $10 million market cap. Now, these two companies, you're going to say, okay, there's not any difference, right? Same difference. Okay, now one of them is $10 million market cap, and they have a balance sheet of $1 million, and then one is $10 million market cap, and this is just for numbers' sake. You could take or add zeros if you want. They have a balance sheet of $1 million as well. Okay, so they have the same. They're the same. They're still the same. Okay, now one of the companies is bringing real world value and has revenue and growth that's tied to real market usage. And then the other company is seeing revenue and growth because of influxes of cash or things that were one-off deals. Which one are you using? Now, the investors that have the most success are the ones that are building the investments into companies that are not only having the good financials, but also having that real world usage and not one-off things that have spikes of revenue or spikes of financials that look good. And so that's why it's so important if you're an investor today. In this market, especially, you want to really look at the real world usage. You want to look at that indicator. So in our AI defense market, most of these companies have real world usage. I'm not sure about this light bar. I think we added it, but I didn't see a lot of real world usage. Big Bear AI, I know they have real world usage. They just scanned my face when I was flying out from California to Buenos Aires. Black Sky, I know they have real world usage. I have a friend that works at Rocket Lab. They launched a bunch of satellites with Black Sky, and you can use their satellites AI in space. So, you know, CTM, real world usage, you could see some of their usage. Palantir, real world usage. You're probably okay. You might see pullbacks and things like that, but where you want to stay away from the companies, you want to stay away from the ones that are getting the hype, getting the finance, but they aren't seeing growth, essentially. And so that's pretty key and pretty important to consider. Like, for example, today I was talking with some investors actually about investing in our company. And I've talked to a few investors, and I'm not going to say their names, but we're having an evaluation on our company right now for Mercatus. We're getting some projections, and this company right here that is using the best AI models in the world, and we're going and getting the data. We're even talking with investors. And today, when I was talking with investors, they're telling me, yeah, I've looked at this company, I looked at this, but I see what you guys are doing. I see how you're getting real growth, real revenue, real users, and also the users are getting real results in this. That's why the investors recently, we've been in talks with some investors. And so that's the same thing that's the type of good indication that you need to watch in this market. So if you wanted to ensure positive returns in this market, you might want to use the companies that are super real world usage. So for example, you're watching on YouTube, maybe Google is not a bad investment in tech. In fact, how is Google doing today? They pulled back probably with the greater market. GOOX, the 2x of Google. Oh no, they're still holding. They're still holding. They're doing okay, right? They were actually up. Google was up today. Jezza from New York, awesome. So the reality is that the growth that we're seeing in the markets has to be tied to real world growth. Otherwise, it will be a bubble because it never had real value. Now, when we're talking about some of the data center companies that we invest in, we could potentially, for example, like let's take a look at data centers. When we're looking at APLD's pullback today, they were down to $34 a share. This stock at market open this morning, we almost traded it. We probably could have traded it. How many of you guys saw it? Because we had a sample session this morning. When APLD pulled down to $31 a share. Now, how many of you guys are watching APLD? Are you watching APLD? Or is it APLD? Or is it AI in general or defense? Let me know. But we were watching it this morning and we saw this pull down at market open to $31. I was pretty interested. In fact, APLX was down 15%. At the end of the day, down 12%. Could have made a 3% gain there. Didn't end up trading it though, just because it was holding below that EMA. Now, overall though, what we're watching, we are seeing that sell-off kick in. What do we know about the biggest concerns in the economy right now? Does anybody know? Go ahead. I don't want to focus on the negative, but comment. What are the biggest concerns in the economy right now? Let's see what happens. I'm gonna open up the comments. I'm gonna see what happens here. Eddie says, congrats, Will. Yeah, for the investing stuff, yeah, it's good. We were talking with some investors. IDK, Redwire hitting $18. Yeah, love that. So again, what are the reasons? So the question was, what are the reasons that the market's going down? Regional banks, okay. So I really want to challenge the thinking here for a second. All right, IDK. I'm one of the investors and will invest 500 million on Will. Dude, appreciate it. If you have 500 million, send me an email. It's basically I'm talking privately with investors right now. And if you ever want to, I'll pull it up for you right here. Now, no guarantees. There's, we're seeing some of the connections and seeing how we can offer value to investors and how they can potentially offer value to us. And I see some more. All right, we're gonna get back into it. What was I gonna do here? Case.com/. All right. If you ever are interested in potentially investing in Mercatus that I show you guys our software all the time, We do have a round zero. Again, it closes October 27th. I'm not really doing like a hard launch or anything. I thought I'd let you guys know. You can kind of see some of our revenue and things like that. If you want to apply to potentially be an investor in the company, I will drop it in the chat for you. Just dropped it in the chat for you. So if you ever want to tune on in, see how our growth has been and potentially how you can be a part of it, it's going to be in the description or in the chat there. So again, jumping back in. So here are all the reasons. Someone says government shutdown. All right, government shutdown. Pretty good. Regional banks. All right, that could happen. What do we know about the regional banks today? A lot of stuff. So here's the problem. You might look at regional banks. You might look at the foreign leader in the U.S., the fears of AI bubble burst, the FUD shutdown, the correction after a bloated value in the AI market, too much, too fast. All these things, right? All these things. But guess what? What do most of those things still not account for? It's going to be the US dollar. Did you know, not to the Argentine peso, I know I'm in Buenos Aires, but I was just trying to search US dollar. The dollar set for weekly loss amid investor unease about trading. Dollar set for weekly loss. Okay. The US dollar has had a weaker trend this week and expected to continue. They are also printing money printing. Let's see what we got for news on the money printing. Money printing during COVID. Okay, let's see. Because we're going to see some more money printing. That's what I was seeing. Money printing happening. Let's see. So the reason I say this is because, yes, the market corrected. But guess what? As well, outside of the market correction, while the market could continue down, there hasn't been major break in trend. APLD sold down. This is pretty healthy, super normal. Okay. We are looking at AMD stock. AMD barely sold down. You know, these companies, while it looks like they really sold down, TSSI, they kind of sold down, but overall uptrend. We've been watching them. That's one to watch. And the reason I say that is because realize your perception might be that the markets are overhyped, but also remember, when the US dollar loses value, what happens? It becomes weaker, and guess what happens? Also, when the interest rates drop, what happens? The markets go up. Why? Is it because they become more valuable? No, it's because the US dollar becomes weaker. Asset prices go up as a result, not because the underlying assets are worth more, but because the dollar's weaker, so it's more US dollars to own the asset. And so essentially what I'm saying is, like, when we're looking at Big Bear AI, you're looking at corrections on APLD. That's a pretty big correction, right? Down to 34 bucks. Not really breaking pattern and very healthy, actually. It's good. And it's actually not something to worry about so much, especially in the markets. I read this really cool study too on gold, because everybody was saying that gold was at an all-time high. But did you know, like, if you do the gold, like if you go to the news, everybody's talking about how gold is record highs, everything's going high. And yeah, we see Bitcoin pull back and all this record high. But the facts were also a little bit skewed, because when they measured gold in the weighted index that it should have been measured, it actually wasn't having any breakoutness. It looked like it's skyrocketing, but relative, it wasn't skyrocketing. It's like, it looks like it's going crazy, but when they looked at the weighted historical data of the company, it wasn't actually growing as fast as they thought. It could be also relative, again, US dollar losing value. It's not necessarily becoming more valuable. It's just like most assets surged. And I think gold went up probably when the market corrected some. But you get what I'm saying. It's like not perfect correlation. Now, this is also why owning assets is so important, because there's this study, you guys, I don't know if you guys know this, and this isn't like I'm doing some analysis here, but really I'm just reassuring some people around the market corrections, because you see them for, if you're a new investor, like you're like, oh my gosh, but like experienced investors, oh yeah, I've seen this before, right? But the holy grail of investing by Ray Dalio. I don't have my books with me because I'm in Buenos Aires. I have some books with me, but this is a really good breakdown by Ray Dalio. And let's see if they have the images. Here they are. But essentially what he breaks down, this is in Principles, I believe. It's a great book. I have it. He breaks down that as you diversify assets, the risk of negative return goes down, but that there's sweet spots that you can enter. And essentially the most positive returns he found had de-risked by about 5% and allocated into multiple assets. And so a really good thing to do is to own assets, but also make sure that you diversify into uncorrelated assets. So for example, like, and this is not like me saying that you should invest in our company or anything, that we're at round zero here, but I was just saying, like, in that link I left in the description there, like, I was just thinking personally, like, I like to invest in private companies. And I'm like, one thing you could do, invest in private companies or invest in your own business, right? Or another thing you could do, invest in stocks. You could also own uncorrelated industries. Maybe that means you're in minerals, and then you're also over in oil and gas. How did oil and gas do today? Look at that. While the market corrected, what did oil and gas do? They did pretty good. And generally speaking, oil and gas goes up over time. If you look at a company like, let's say, is this Chevron right here? Let's see. Over time, you could see this stock grow, right? If you look at, BP, British Petroleum, and you go back, for the most part, this is a pretty leveled out asset class. And so I'm not saying like diversify because diversification saves you. I'm saying it's actually been proven that, like, if you have a little bit of Bitcoin, some crypto over here, which this is kind of what I do. I got crypto and Bitcoin, I got real estate, and then I have stocks, and then we have our own business, and then we also own, you could call them digital assets, I guess, which could be considered like our like content or what have you. And then we also invest privately in companies. And then, we do other things. We do other things. But like, for the most part, that's kind of how it works. And so the reason I share that with you is because I know it's a little bit like different than the normal analysis that we do. But I'm just saying, like, whenever the market pulls back, it's a really good time to kind of like reassess and be like, how is my diversification? How is quantum today? Let's see. We see quantum pull back a little bit there. IONQ down to 64. These aren't pullbacks that we didn't expect. I mean, so far though, if you look at that surge, I don't know that we really saw a break in pattern. That's the crazy part, is even with this big pullback, I don't know that we really saw a break in pattern. Look at that. Rigetti, look at that. What if it bounces here, holds? Is that possible? Maybe. QBTS, look at that pullback we were watching there on QBTS. Boom, they did continue to pull back. Do they continue the trend? These are the types of things we want to watch on Monday, because imagine, either US dollar stays a little bit weaker, tariffs get worked out, government shutdown discontinues. Like, those are three indicators right there. Tariffs go away, boom, market can go up. What's the other one? Government shutdown discontinued. Oh, defense stocks most likely rallying. US dollar weakens or strengths, that's a catalyst right there. So yeah, I mean, if they pull back more, great for the long term, short term. That's kind of how things are looking. The quantum stocks in general have seen some overvaluations currently. But that's what's going on. And why it's important, again, real world usage in quantum is key. Semiconductors have held strong. You see, most semiconductors holding pretty good today. They did go negative. In fact, we capitalized a little bit on the negative side. Didn't move much as we got in there. Still holding about $4 a share on SOXS. So we kind of shortened a little bit there, hedging our positions against all the tech that we own. Wanted to go a little bit against the tech market this morning. That's what we did in our live session. And so, when the markets pull back down in long-term positions for these companies that are providing tremendous value, AMD is providing Starlink satellites. Google, you're watching it here. NVIDIA, you're probably using it right now. So robotics, markets like this, you see the pullbacks, very normal, very part of the game. I will say AI is might look like a bubble, and I see everybody saying, oh, the AI bubble, this. It's not a bubble. If it was, like, I can tell you it's not. Now, will other things look like a bubble? They will kind of look like a bubble. Why? Because AI it becomes valuable and could make other things irrelevant, which then those things are valued right now, and then they are not going to be as valuable in the future, and then they kind of pop. Does that make sense? So the bubble isn't AI. AI is actually exposing other bubbles in a way. Now, there is certain instances, like I said, where if there is not real world usage on an AI company, then yes, you could be looking at a bubble situation. But if you're looking at fairly sound companies and you're looking at, real world usage, data center usage, I mean, that they're seeing the growth. You can look at the revenue, then probably all right. Same thing with the space tech market. Space tech corrected big today. You see Redwire down 5%, Voyager down 6%, SPCE, that one's always down, but that one's down 7%. And the space market is at an unprecedented growth rate right now. And that's why we see Rocket Lab up to $70 a share this past week. Can you believe it? 73 bucks. They just keep finding new highs. And so the reason is because of the value in space. There's a new frontier. It's like the first people that started ships sailing across the sea became some of the wealthiest in the world. First people starting rocket companies and space aviation and founding new frontiers to potentially other planets that we could have unlimited minerals, or I don't know. There's a lot of opportunity there. Who knows? There's tremendous funding. That's partly where the venture world comes from. To venture, to put money into a business, to venture and invest in the boat sailing across the sea. And you don't know if they're going to make it. It's a venture, but hey, you see, that's with space tech. Now, space tech's seen some more profits recently, and they've actually been turning net income positive in certain instances. So we really like to watch the space tech market. We're going to continue to hold many of these stocks we hold long term. So we'll continue to ride there. You can always screenshot if you want them. Patrick, all right, I'm going to jump in for Q&A, and then we can go ahead and do some stocks real quick. What do we got going on here in Q&A here? SoFi. I see a few SoFis. The postman says SoFi. All right, let's jump into SoFi real quick. Financial industry, SoFi, up to 26 bucks a share. All right, so SoFi, they've actually held a really good trend. They've been breaking out. They recently pulled down to $25 a share. And we'll get some deeper analysis, but if you look at their company, they have personal loans, banking, credit scores, mortgage loans, all types of different loans, investing. The only thing that I know that they don't have, which I think is a massive oversight by the company is not having crypto on their platform. I think that's a big oversight. But they are doing the loan industry. There was some talk that potentially some of their loans were not getting paid back, but we could see that on the balance sheet here. That's kind of the case. Their liabilities are pretty high. You can see their liabilities surging a little bit, about 28%. Still got some equity around 6.8 billion, but assets to liabilities there, there is a little bit of a gap there. They are bringing in positive revenue with $97 million in net income positive. That's up 43%. So as of right now, they are somehow bringing in 43% more revenue and 26% or 26% more operating expense, which is leading to, you can see their liabilities have gone up more, and it looks like their equity has actually been decreasing. So that's part of that is just the liabilities, as I mentioned. So when you see the market cap 31 billion and they're bringing in close to $1 billion a quarter, I would be led to believe, just looking at that they're overvalued. PE ratio would agree, $58 or 53.8 on the PE ratio. That's gonna indicate some overvaluation. And then, if you're looking like Warren Buffett style down to, let's say, 20 PE ratio is what Warren Buffett looks for, or below, you're probably looking at, in that case, about half their price right now. So around $15 a share. Yeah, so kind of like back down to this previous resistance level. Man, that's quite a steep one. SoFi holders will not like it. They don't like me for that one. I know there's a lot of bullish people on SoFi, but I mean, just from a fair value perspective, they are a financial company, and what happens is sometimes financial companies, fintech, trade or invest at much higher valuations than they are because they're in a growth market, a big market. I could see that true. Like when I was just mentioning, we were kind of doing some potential raising here. It's a private offering. It's not a security or anything like that, but round zero for Mercatus, and part of the valuation, when I was talking to ChatGPT, they said we should value our company at 15 million. I said, nah, that's too much. Well, give me a conservative number, 7 million, they tell me. Now our real value is about 3.9 million. That's given our current and future projections. And so when I'm looking at our current and future projections, you could be looking at SoFi and say, any fintech company that you're looking at for the future, they could be pricing in higher, but the real valuation could be lower. And that's why we're not raising at that or considering any investors really at that $7 million price point. Or that's not really relevant at all. It's more about the investor. But anyway, you kind of get what I'm saying. So crypto coming soon to SoFi, Thomas says that would be a catalyst for SoFi for sure. But at the same time, I hate to say it, but I think they're not too late. They're not too late. But at some point, people will realize that if the true reasons why crypto are popular among people that want decentralized power come into fruition, then most likely, guess what? People are going to want to hold a wallet as opposed to having a brokerage hold their crypto. They're going to want to have their own wallet rather than have a brokerage hold their crypto. So that's just something to consider. Like SoFi, they might be fine. I don't want to be a bear, but that's just based on the facts of how I normally analyze stocks. That's how I would anticipate SoFi would pull back. Aside from that they are on a consistent uptrend. You can kind of see them holding there. Maybe they hold that, but you do see them start to cross below that EMA. Usually that EMA, that blue line, acts as a support when they're bullish or a resistance when they're bearish. And you can kind of see them start to cross below there with that 200-day moving average down there around that $15 to $18 price point. So just something to watch on SoFi. You know, and if you're in it, hey, all power to you. That's just kind of how I see it. What else do we got going here? All right. Well, we got time for one more. Didn't confirm crypto's coming December 1st. Saw pictures, promo material. Didn't see it on SoFi, but that's cool. And UAI 908% return this month. Let's go. Nice job. Hit the like. Yeah, sure. Go for it, guys. Hit the like button. If you're here, hit the like button. Listen to Gainer. Appreciate you. The Postman 93, I won't get upset at that. Plus rates cuts. Yep, rate cut could definitely be another potential catalyst aside from the government shutdown, aside from tariffs being lifted. That is another one to keep in mind for sure. All right, so we touched on Redwire a little bit here. And then CJ says, let's hope that Big Bear AI takes questions during its next earnings call. I would hope so as well. I think it's really important that they talk with investors. Joe says entry point on NBTS. Patrick says NBTS. Seen some NBTS ones. Jerome Powell joined the chat and said, well. Oh, Jerome Powell. All right, guys. Who joined with Jerome Powell in the chat? All right, Jerome, let me ask you this. Have you read the book Jekyll Island, Jerome? And how do you feel about the second wave of our, quote, founding fathers, or could be seen as the second wave? JP Morgan, the Rockefeller, the Vanderbilts, putting together the Federal Reserve and naming it something that sounds like the government, but you can't use the word government in the name of the company, so they use the word Federal Reserve to preserve their wealth. How do you feel about that, Jerome? All right, let's if Jerome, you're not gonna say anything, Jerome? All right, man. So we got, okay, we'll do a little bit of a compromise. We'll do two things. We'll do black sky analysis, and then we'll also jump in on that NBTS. Black sky analysis, we're going to go ahead and do over on Mercatus. Let's get it going here. All right. Let's get some analysis on black sky. And personally, I hold black sky. All right, we'll get some analysis going there. When it comes to, oh, look at Apple. We had a last analysis on Apple of about 48% gain. So far, it's gained about 35%. That was a really nice move on Apple. Super cool. Let's jump into NVTS while that analysis loads on black sky. Okay. Semiconductor market, NVTS, down about 5%. Up to $16 a share. I don't have much on this company. I've traded them a few times, but to be honest, let's see, they pulled back recently. Yeah, to be honest, like I haven't been able to see their real world usage as much. They got a $3.1 billion market cap, negative net income, $14 million a quarter, balance sheet $449 million. So their financials look really good. And then Navitas is building a unique semiconductor here. World's first GON power IC. So they're actually building extremely fast data connectivity technology, if I'm not mistaken, for potentially data centers, could be for some other companies as well. And they're, let's see, the thing that I notice is the deals. They have a lot of emphasis on the markets, but not as much emphasis on their own product, but that's okay. We have seen energy and AI chip demand surge, and they're looking to benefit by being one of the companies providing technology to streamline the connectivity and processing of GPUs and AI data centers that use their products called CRPS or OCP form factors. And that's actually what they normally use now, but they're actually implementing what are silicon main material used in semiconductors for power supplies. But the performance and efficiency requirements of next generation PSUs for AI applications are exceeding silicon's limits. As a result, the industry is turning to wide bandgap materials such as silicon carbide and gallium nitride to meet processing demands as effectively as possible. And so NVTS, are they connected to NVIDIA? That was one of the questions. I haven't seen that. I don't know if there is more information I can get on the stock as of recently. I could probably jump in. I'll jump into Mercatus. Here's how the projections look for Black Sky, looking negative over the next day and the next week, 1.5%, as they recently surged big time. Next 3 months, though, looks fairly bullish for Black Sky. We're looking at a 5% gain or up to a 10 to 15% gain over the next year for Black Sky. I would say that to be true. I do invest in the stock long term. They're projected to get up into that price soon. Now, let's get into, so that's kind of the breakdown on Black Sky. They're a space company, AI-driven tech with really, really high quality images. When it comes to NVTS, let's get the quick analysis. And let me just use Mercatus real quick to get a little bit up to date on the company here. All right. So company jumped to all-time highs, launch of chip to support next-gen AI. Okay. And what side of next-gen AI? Okay, 5th day straight. Giga Device and Navitas unveil digital power joint lab. Papa John's ASML. Okay. Get your Papa John's pizza at Navitas. Just kidding. Let's see. NVIDIA, and how much higher can NVIDIA take Navitas semiconductor spot? Okay, so there's a partnership with NVIDIA. Let's go read the article. This is why I like Mercatus sometimes. You can get some good data sources. They partnered with NVIDIA, and it looks like that's going quite well. AI workload increase, and Navitas is acting as a partner there to relieve some of that. They're expecting the semiconductor sales to skyrocket as a result. Some of the partnerships recently with NVIDIA. And if we look at the recent financials on NVTS, let's take a look. It's interesting because that was the news. We have seen increasing revenue year over year, but not anything major yet. Quarterly, they've actually decreased a bit in revenue. So I haven't seen it really tie in just yet, but we'll stay up to date on them. As far as current levels, they have a previous resistance level at around $13 a share. So that would be a level to watch here on NVTS. 1350 is the nearest resistance acting as a support, and they recently bounced there this morning at market open, and looks like they're holding their nearest resistance at 1667 was the last, or 1685. So they're looking for a 10% gain to highs or drop down to this nearest support level around 6% down to 1350. So that's what it looks like for NVTS. Long term, probably looking good as they're in the semiconductor market. They did have a dip today around 5% and then recovered. And they're still down after hours. So we'll watch them today and continue to do some more research on them. I appreciate you all. I hope you have a great rest of your day. If you want to tune into our live sessions, it's going to be the second link in the description for our daily live trading. If you missed the reveal of this machine and you want to use more AI analysis in your investing, go ahead, click the first link in the description. There's a very special deal for the Mercatus access. You get unlimited access to Grok, OpenAI, Claude, Gemini, all the best models in the world, including any new quantum technology that we integrate. You're also getting access to search as many models or as many companies or stocks as you want. You can utilize the new features, and the main thing that we do is we bring the best data to the models. So the models consider things like SEC filings, advanced chart indicators, multi-source intelligence, including institutional holdings, insider trading, that those AI models otherwise don't have. We pair with the analysis. So if you're looking to get that really good data, special data, into the best AI models, we use the most premium, so you don't have to guess of which models to use. We use Grok, OpenAI, Claude, Gemini, and the most premium versions of those models for you to use as much as you want to get analysis of companies. So again, it's going to be the first link in the description for this machine, second link in the description for StockMate for our daily live trading. If you ever want to watch the daily live trading as well, you can get StockMate as a bonus Monday through Friday, tune in the live sessions, and get a free t-shirt when you join. And that's in the first link in the description down below. Appreciate you all. I hope you have a great rest of your day. If I earned your thumbs up, smash the like button. Thanks so much for tuning in. Eddie, Patrick, Angela, Captain. We'll check out CLSK next time. And Uncompromised One. Thank you. Zane, thanks for tuning in. James, appreciate you all. And I'll see you in the next video. Take care, guys. Bye now.